Keep your eye on the ball as a business owner. Cash flow is king. You can sink or swim based on how you focus on that very thing. Join us for a conversation today with a financial expert to talk about just that and the future of finance. My name is Chris Joslin, and this is JOZ Bytes. Well, welcome again to another edition of JOZ Bytes. I am Chris Joslin, your host. As always, we are sponsored by iLevelLogistics.com. That's www.iLevelLogistics.com, hopefully coming across your screen at this very moment. And we have a wonderful guest today. His name is Scott Walton. He's president and CEO of Westmark Capital. I've known him for quite some time. He's an expert in a financial lending area for not just the transportation logistics industry, but many different industries, commercial real estate, et cetera, health finance. And we'll talk a little bit about those things, but we'll also talk specifically, as I said in my preamble, a real focus and attention on cash flow for small and medium-sized business owners. Now, large ones as well, but this is our focus for today. It's a real important subject and one that deserves a much longer podcast, much longer video than this, and we'll probably do that at another time. But for today, I want to again introduce a very astute financial person and one that can dive into and create some understanding that may be missing from your portfolio of understanding right now. So help us welcome Mr. Scott Walton. But really, Scott, welcome aboard to this edition of JOZ Bytes. It is my pleasure to have you here to speak from really another point of view on how businesses, small and large, but focused mostly on small and medium cap businesses, look at themselves, their financing, or need to look at themselves and focus in on that more. Scott, welcome aboard. Thank you.
Thanks, Chris. Thanks for having me. And you're a good friend, client, ex-client, and look at you as a really good friend and confidant. So I appreciate you having me.
Yeah, fantastic. But let's just start out this way if we can. I love to bring in different aspects of the transportation logistics supply chain world. And I know that you, from a financial standpoint, are into all kinds and see kind of the outsider's perspective of a lot of different types of businesses, transportation just being a single one of them. But how did you get into the financial world? Is there a story behind the story that brought you to Westmark?
Yeah. Well, I'm spent 4 years in the Navy. Went to college for a couple of years. I was having too much fun. As my dad said, life's not all fun, and I really was done with school in my mind. After high school, I just really wanted to have fun. He goes, if you want to have so much fun, why don't you join the military? As a joke. And his family, all my grandparents, they'd all served. So I'm like, why don't I carry on the family tradition? And I went in the Navy office and took the ASVAB, and next thing you know, I'm getting shipped off in the Navy, and it was a great experience for me. They end up giving me college funds to, go to school. And I went to school in the Navy, while on board the ship, and which they had a new program there. And it was a ship called a shipfare program where basically they brought college professors on and let us go to school. And I did a couple of years of college on board the ship, got out and came home, and I started repoing cars. I'm a small guy, Chris. You and I've met in California.
Repo cars to financial.
Exactly. Yep. So I started repoing cars, and I started repoing for a company called Commercial Credit in Fort Worth, Texas. And met a gentleman. I repoed a car, pulled it out front. It was cleaned. It had I had the keys. The manager, his name is Gary Dennington. He came out and started asking me questions. He asked the girl that worked for him, who brought this car in? And she pointed to me. And he said, "You're the repo guy?" And he looked at me up and down. He goes, "You're a little small to be a repo guy." And I said, "Yeah." He goes, so how did you get the car cleaned out and how did you get the keys? And I told him, I just asked. I had pulled the car up on the tow rig and knocked on the door when it was up on the tow rig and just told him, hey, it had a baby car seat. And just as a human being, I said, hey, if you can't afford this car payment, you're not going to be able to afford to get a new baby seat. Why don't you take your stuff out so it doesn't get stolen? And I told them the law. They've got 21 days legally by the state of Texas to get a payment arrangement done with the lender,
Hmm.
and they could get it worked out. And I explained that all to them, handed my phone number to them, and they were so thankful that I did that. And they handed the keys over, and they took their baby seat and all their belongings out of the car. And Gary saw that, and he's number one. It saved him $150 to cut a key, so he got his keys. The
Right.
borrower actually made a payment arrangement, so they got all their interest back. So Gary asked me if I'd wanted a job, asked me if I've ever sold before, and I told him no, I never sold. And he said, well, you're actually selling by doing what you're doing, by getting these keys and the way you're doing your job. So he offered me a job on the spot. I told him no. A couple months later, a couple cars later, worked on me, finally threw me a number that I couldn't really resist. I was still broke, repoing cars, as a
Right.
kid.
Right.
And anyway, gave me the job, and that's how I got into finance.
Wow. That,
Finished
it's
school.
really interesting to me that story. It kind of, I don't think a lot of times when, especially young people getting into markets today, and,
Mm-hmm.
and there was a previous podcast that I did a while back, and I talked with a gentleman I know that's in the recruiting business,
Mm-hmm.
and how that there's kind of a resurgence into the logistics supply chain world, in that there's kind of refreshing of some older employment moving into that from other industries, but also there's this new generation coming up. And a lot of times people don't even realize they're selling when they're selling, that
Absolutely.
they're already kind of doing the things that engender, clients and prospects to
Yep.
come aboard. And that's
Absolutely.
that's a really good story. That is
Yeah,
excellent.
and that's a good point that you just brought up. People who have never been in a sales position, if you say sales to them, my wife breaks
It's
out
like,
in hives.
oh,
She broke out
exactly.
in hives with our healthcare business, and she freaked out just the word of her going to sell. But if you put it in a different way, I mean, people sell every day. That they, like you said, they don't even realize they're doing it. But
Right.
there are certain people that are good at it, and certain people that need to do other things, counting or
Yeah.
book.
I
But
I know some very naturally gregarious people that every time I talk to them, I'm just kind of amazed because everybody likes them.
yeah,
And
absolutely.
I'm more of a person that looks at it and approaches things and says, I want to try to solve a problem, a
Uh-huh.
challenge for
Yeah,
somebody. And that may be a slightly different kind of sales, maybe the kind that doesn't have people break out in hives so much, But at the
absolutely.
end of the day, if you can bring something to the table that solves another person's problem, then
Hmm.
you're selling. And
Absolutely.
I think one of the biggest things that I've noticed in my industry, and the logistics, supply chain, transportation industry is so broad that we could talk
Hmm.
on a million different subjects. But I'm going to try to gear us and focus in more on a small to mid cap business size.
Okay.
Because there's so many people out there
Hmm.
that are entrepreneurial, or they belong to a small company, and they really don't have a feel for cash flow. They know how to dispatch, they know how to get trucks out on the road, and they know how to set up kind of dynamics for shippers or receivers, et cetera,
Yeah.
like that. But when it comes to, are the dollars coming in faster than the dollars going out, or is the appropriate
Yeah.
margins there? They don't even think about that. So
Absolutely.
what is your perspective on something like that?
That's a very good question, and so many people in business, some people didn't even mean to be in their business. Something happens, a relative passes away, they assume the business, they buy a business that's in trouble. Uh, there's so many different factors that go into running the business, and cash flow, as you and I know, being business owners, is the lifeblood of a business. And if you are not on top of your cash flow, you're not going to be in business very long. Um, you know, looking at your numbers, getting to know your numbers is the most important thing, and having your books together. And so many entrepreneurs have the head in the sand approach because it's something they don't want to do. Um, the most inexpensive thing to do is hire a freaking $15 an hour bookkeeper. Or you can go on Upwork and get someone out of the Philippines that's dirt cheap to do your books, and you can tell them where you want the different things. Get with your CPA and decide on the best strategy. Now, CPAs are a different thing. Now, you have to find some CPAs are really good at what they do, or in a certain aspect when it comes to the government reporting, but not always the best thing for you as the business owner, because some of them are really conservative. So it's wise to find someone that's not necessarily a CPA, but maybe a tax planner. Then have your CPA file the taxes, so you're able to get all your write-offs,
Right.
all the interest that you're paying on loans, depreciation on the equipment, all that stuff. But what I see from being a lender, I see
Mhm.
people not having their books together is one of the first problems they run into, because they don't know where they are. And
Right.
if you don't know where you are in your business, you don't know what you're making.
If
You
you
have
don't know
no
where you are, you don't know where you can even possibly go, right?
exactly,
It's
exactly.
interesting because you're pointing out something about balance from my perspective. You know,
Hmm.
you look at this, your comments about CPA versus a financial slash tax planner,
Hmm.
they're really two different animals, right? The
They are.
CPA is looking from the perspective of complete total cocoon of safety,
Yep.
and which is very intelligent, because
Yep.
the last thing you want in the world is the IRS to come knocking on your door when you
Absolutely.
don't have your I's dotted and T's crossed, right? But
Absolutely.
at the other side, if you're an entrepreneur, you know there's a certain amount of risk that you're taking, and you
Yep.
have to gauge your own internal
Hmm.
amount of ability to take on risk levels.
Yep.
But a tax planner will look from your side and say, okay, yes, the IRS is not going to look at this, but you're missing out on this or that
Yep.
or the other.
Yep.
So it's real important. And from a financial standpoint, from a lender standpoint, and I know you have all kinds of different mechanisms that you use for different sizes of business and their
Yep.
creditworthiness and all that kind of thing. But from your perspective, I would imagine that it's you want to see the safety going on. You want to
Hmm.
see the proper documentation, everything else. But you also, I would imagine, want to know that these are the kind of people that are trying to grow, right?
Absolutely.
Because that's why they're coming to you usually in the
Yes.
first. Well,
Yep.
two reasons. They're either trying to grow or trying to survive, right?
Yes.
It's one or
Hmm.
the other.
Yep.
So that's very good. But I think for those that are listening out there, if you don't take anything else out of this conversation today, take out of it that you've got to pay attention to your cash flow.
You do.
Because if you have more money going out than coming in, or if you have too much money going out too quickly and not enough
Hmm.
money coming in,
Yep.
then you either need one of two things. You either need to recalibrate how you're
Hmm.
budgeting everything,
Yep.
and or you need to have some kind of financial buffer zone, i.e. a loan of some kinds, which we're going to talk about in a
Yep.
minute, to facilitate the cash flow that you need
Yep.
for a business.
Hmm.
Don't ignore your customer. You've got to operate properly. So you got to have your sales in order, of course. Got to
Yep.
have your
Yep.
pipeline, but you better well have cash flow being looked at really very closely. So
Absolutely.
when you're talking about this, though, if you're if you're a small business that's trying to get over some kind of horrible hurdle that you've had to go through a time period like we've had in the last year with
Yep.
pandemics, things like that, or if you're ready to grow,
Hmm.
what are kind of some of the financial mechanisms that you point out? I know it's different all across the board. It's probably a conversation for hours and hours, but
Hmm.
from a high level standpoint, let's take it two ways. If you have somebody trying to get through the kind of dynamics we went in the last year,
Hmm.
is one type, and somebody that's trying to say, okay, now it's time to take the next step in growth. Are there certain lanes that you look at financially for those people?
Yeah, absolutely. And it depends on the business, what
Mm.
they have, of course, in assets, what they have in terms of cash flow. Um, you know, if a business is looking to grow, let's just say they have an opportunity to buy out a competitor. That competitor could bring them an extra 2-3 million plus a year in net revenue. You're going to be willing to take a bit riskier of a financial transaction. And you need to just say you didn't have the cash to buy it, you're going to have to take out some form of a loan. But there's a time that you have a time frame. Say there was a death in the family, they need to clear out the other family members to get through probate, what have you, and you need to get $1 million over to this family quick. There's a few different mechanisms you can do in the private market. You can do what's called an asset-based loan. That's an ABL loan or line of credit. If you've got good credit, you've got good assets, you could do what's called an ABL line of credit. That can take 30 days to close. Generally, if you have all your ducks in line, you have your books done, all that. Then there are some higher interest type deals you can go get. Merchant cash advance depends on what you're doing every month. If you're doing $1 million a month, you can generally go and borrow up to $1 million on a merchant cash advance.
But Scott, the merchant cash advance versus an ABL kind of thing is, there. One is a secured versus, well, could be non-secured, at least in part, but it's also kind of the rapidity of how you pay it back, right?
Yep.
It's the merchant cash advances. I've seen things out there we pay nearly daily.
Yes,
stuff,
yes,
right?
daily, weekly. They do daily and weekly generally on the MCA or merchant cash advances. Those are notoriously much higher interest. I don't recommend them for everyday working capital, but if you're using that money to go grow your business once or twice a year, you need to use them. That's fine. Don't get more than one. Get one only. But if you use those for when you need a big chunk of money at one time, you're going to use it once that year or even once in your lifetime, you can take it out. Yes, you're going to pay fairly high interest, but if you're using that money that's going to bring you a lot of money down the road, as in buying a business or buying extra piece of equipment, you've been turned down by the banks. No one's loaning you money, and that is your only way to do it. It can close within a few days, and you can get that cash, go do what you need to. Now, I don't recommend that for everyday use. Again, it's got to be a special circumstance. Ideally, you'd want to do an ABL line of credit if you could, because that would be entangling and wrapping up all your receivables, your equipment, and everything to the bank under what's called a UCC1. A UCC1 is Universal Commercial Code. That is basically a lien, an all-purpose blanket lien on your business that encompasses pretty much everything. The SBA does this as well. They do blanket liens as well. So once you do a loan like that, either through the SBA or through a bank, doing an ABL type line of credit, you're pretty much locked up. You can't do any other type of financing but an MCA. That would be the only time. That's why a lot of people do them, is because that's their only option. The best way to go would be to
Scott, does the UCI or UCCI or UCCI
UCC.
Does that also, when you're talking about these loans, and I know that when people have LLCs and S corps and things like that, there's a kind of a layer of assumed protection between yourself and your independent self, right? Your company and your independent self.
Corporate veil.
But what I've noticed, at least, is when I read over some literature on this, is that it's almost a must to have a guarantee, a personal guarantee amongst these type of things, unless you have a ton of assets that are leveraged.
Yeah, exactly. You're right, Chris. Yeah, almost all banks and credit companies now do require a personal guarantee. Now, there are certain times, like you just said, especially with banks, they almost always want a PG or personal guarantee, unless the LTV on the loan is below 50%. LTV being loan to value. If there's loan to value of the loan, say if the value of the assets is 200 grand and the loan is 100,000, that's a 50% loan to value. So generally, if it's under 50%, most banks won't require a personal guarantee. That's again, most banks. Now, on certain MCAs and ABL lines of credit, you can get a non-recourse loan, which is
Right.
a non-personal guarantee. You can get those definitely. But again, you're going to pay a higher rate.
It's interesting to me because the 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 lending institutions, there's tons of them. Obviously, there's
Mhm.
a lot of it seems like right now there's a lot of money being lent out there in different ways, shapes, or forms, but the risk tolerance for the institutions is much less than it used to be,
Yeah,
incredibly less.
yeah,
There was a time just before 2008,
mhm,
as you can imagine,
yeah,
that a company I was involved with, not mine, but someone else's, it was a golf course handshake, bank to person, $3 million credit line. I
yeah.
mean, that's really
Mhm.
what it was, and I can't even imagine thinking about something like that
I
today.
know. Yeah,
So I
yeah,
think the message, at least that I'm gathering from this, is there's a lot of different mechanisms, but you have to be willing to risk
yes,
in substantially, really personal.
absolutely.
So
Yep, yeah,
yeah, yeah.
yeah. Because if
But
you don't
so
pay, yeah, they're going to come after you and your personal assets as well. So when you're signing a personal guarantee, you do need to be cognizant of what you're getting into and what your risks are.
So, everybody in the last year and a half has been focused on all the bailout, well, lack of a better way to put it, the bailouts, the government
Mhm.
intervention, the supply of money flow from our taxes into the SBA and then back out to businesses of different sizes.
Yeah.
And I know that they're very diverse. I mean, I've seen some documentation about, how many loans that go out there in billions of dollars and what types are they loans? Are they micros? Are they
Hmm.
grants? All that kind of thing is all coming from the SBA. And it seems to be there's this funnel and additional focus on that. It must be growing. The infrastructure of that
Oh, yeah.
place must be growing like
Oh, you
crazy,
know it
which
is.
just
Yeah.
means complexity, right?
Yes.
Um, but it seems like everybody's going after some kind of SBA thing,
Yeah.
whether it's the PPPs or something
Mhm.
additional.
Yeah.
Do you have a perspective on that? Because you're, I don't know if you do SBA stuff too, but I
Not anymore.
thought you were primarily private
We
loans,
are
right?
private. We are private. We used to do SBA loans.
Hmm.
We primarily get most of our business from banks. So at some point, we kind of realized we were stepping on banks' toes, some of our referral sources' toes by being in that line, and we weren't really doing a lot of it anymore. We did a lot of it back when we did a lot of real estate. We did a lot of 7A and did a lot of hotels. I had an Indian guy that was my partner, and we did a
Hmm.
lot of hotels back in the day. And now that we're not really doing that, we stepped out of the SBA market
Gotcha.
completely to let all of our referral sources, we can now pass that on to our referral sources and they pass us the deals we want. Because I really don't care to deal with the government bureaucracy.
That's
We're,
what I
we're
was thinking.
if we're a private lender, we like to be nimble and fast, and that
Hmm.
is not the definition of the federal government. It is nimble and
Yeah.
fast.
It's funny to me because I look at this, and as we're developing this conversation around cash flow and everything,
Mhm.
I can see this divergence occurring, right? Like, if people have the right assets or the right background or the right relationship with a local bank that they've been doing business with forever and that will grant them some flexibility, then I would imagine that's the first line of defense for people, whether
Yeah.
it's personally or business.
Hmm.
But when you get beyond that layer, it seems like it's either you go long, very complicated SBA-ish kind of 10-year,
Hmm.
pay by the month stuff, or you go, I need something fast and now, which is direct lending, variability on the leverage side of it, or the secured side of it,
Hmm.
fast turnaround and quick pay, high
Yep.
interest,
Yep.
which goes back to what we talked about with cash flow. Like you have to you have to say, okay, my transaction average, percentage of profitability is X. And if
Hmm.
this capital is going to cost me Y, then I better add it here now.
Exactly.
Really do that.
Exactly. And that was my point on buying another business. That's when I really say those things are good
Mhm.
because you are bringing in another revenue on top of that that would easily service that debt. And then, of course, you can write, depending on who you hire for your taxes, you can write off that whatever you pay towards those financing charges. Um, and a lot of we deal with a lot of contractors, and what they do with those types of deals is I had a roofing company. He was buying out another roofing company, and that other roofing company was doing 3 million a year. So he took out a $500,000 loan, MCA, to buy that, bringing that new company on easily serviced that debt alone. So it didn't even
Right.
come out of his pocket. It came out of Newco's pocket. So
Right.
it really worked like a charm. And he paid it off early within like 90 days and got an early prepaid discount. So it works out great in certain times like that. But if you're just chugging along and you're barely making payroll as it is, you throw one of those loans on top, you're going to get in trouble. And now there's other ways you can do it, especially in transportation, is factoring. That's much lower cost, much smarter way to do things, in my opinion. Um, and you do have to shop on those because in transportation,
Mhm.
you guys know
They're
there's
all
tons
over the
of
place.
factoring. They're everywhere. Um, and you do have to shop those really well to try to get your margins as high as your margins can go. And you also need to negotiate with people you do business with on possibly trying to pay you a little earlier so you don't have to take those loans out if you
Right.
can, by giving some sort of a discount. you know you need to watch that too. Again, your cash flow, you need to make sure you're doing it smart. But there's a lot of people willing to do it. You just have to
Yeah.
ask. Um,
Yeah.
and
The
mhm,
factoring thing has always been real interesting to me, and I haven't used it, but um, it seems to me, again, if you build in the right numbers into
mhm,
your evaluation of your client
mhm.
profiles, you can come up with a way to make that really work because you can get paid very, very quickly.
Yes,
But you got to find the right one because there's recourse, non-recourse.
yes.
There's people that will charge more initially and then pay
Mhm.
back more later. There's
Yep.
reserves. There's all kinds of complexities there. And
Yeah.
this podcast is not for everybody out there. It's not to get you overwhelmed by this. It's to draw your attention to the thing that is the lifeblood, right? I've talked in the past about the vital signs of companies and the important, 4 or 5 items to focus in on as a business owner in particular, or even a person working for a business that wants to have a career there kind of has to know where their company is headed and what they're looking at and doing. And it's like blood flow, right?
Absolutely.
If you don't have capital flowing properly through your system, it's going to die, or it's going to
Exactly.
die slowly,
Exactly.
and I think you're right on the money well, right on the money, no pun intended. but but uh, but that's the kind of thing you need to look at. And
Mhm.
you if you have an opportunity that's going to pass you by and a door is going to close, then evaluate the risk and go out there and get a merchant capital kind of
Mhm.
situation going, and
Mhm.
it can really put you into another category. But if
Yeah.
it's operational, if it's chugging along in survival, then probably not look that way. Look to
Exactly.
some other mechanism, right?
Exactly. Yeah. And also be careful too. You've got to look at there's some companies out there that want to take equity too, and you need to be careful of that because you can't write off equity as interest. Once
Mhm.
you give that equity away, it's gone. I mean, and you're going to cry every month when you're writing those royalty checks to whoever that investor was, and you're definitely going to cry when you sell the business and have to write that
Right.
big check
And that's
to
the VC world, right? Is what you're talking
that's
about?
more VC, yes, more venture
Venture. Okay.
capital, which I don't do anything in, but
Mhm.
we do see people do it on occasion, and that's where I would probably say, hey, versus giving away your company equity, you would more likely, if you can, do an MC merchant cash advance because you're not giving away equity.
See,
Um,
it's interesting, Scott, because the VC side, the venture capital side, is what you watch on TV and you hear about and this and that. It's kind of the sexy, hey,
yeah,
we're gonna blow up, right?
yeah, yeah,
And I suppose if you have kind of a business model that is more, it's grounded in the possible,
yeah,
and it's not really culminated into something yet,
yeah,
and you get that VC capital and it brings you to the next level and you're willing to slice off a piece of the pie, great. But for the
Absolutely.
most part, for most entrepreneurs, for most businesses trying to either climb out of a hole or get to the next level, what you're talking about is much more viable.
Yes, yes, absolutely. And that VC money is a lot more reserved in the tech world. You see a lot, in the a lot of VC in tech. And, most of our businesses don't that we deal with aren't into that space. We do some tech stuff, but very little.
Hmm.
Most of our guys like you and I, guys that started our businesses from the ground up and have our blood, sweat, tears, and our whole
Yeah,
everything into the business. And it's our baby. Our businesses are our baby, and you need to really look at it as a living, breathing baby, because you have to take care of that baby, make sure it's got blood flow, cash flow.
right.
You have to look at it uh, diagnostically and really go through. And that's why I said at the very beginning of this is know your numbers. I know when you're out there in business, and the last thing you want to think of when you get home is open the books up, open that Excel, and you just makes your stomach turn. You don't want to think about it. You don't want to do it because in your heart where you are. You
Yeah.
know that it's probably not going to be something you want to see, but it's something you need to know. Good, bad, or ugly, it doesn't matter. You
If you
need to.
turn a blind eye to it, it's going to catch up to you
It
eventually. It doesn't
absolutely
go
will.
away. Yeah,
It
and
absolutely
it's
will.
interesting you mentioned, tech though, because there's it's not brand new phenomenon, but it's gaining an awful lot of traction in the transportation logistics supply chain industry
Really?
is really the advances being made in blockchain technology. Everybody
Yes.
looks at that and kind of defines it as that's that crypto stuff, which is kind of cool if you really want to get into white papers and look at things
Oh
like
yeah.
that. But from a real pragmatic standpoint, and maybe you can touch on this just briefly, but from a real pragmatic standpoint, it seems to me that having a legitimate, uh, I like to call it chain of custody
Yeah.
on, especially when you're talking about smart contracts and things like
Hmm.
that. It seems to me that that applies a lot to the financial world and the viability, not just for large companies that are thinking about this in real holistic matter, but for smaller companies that deal with those companies. Because,
Hmm.
like my company, I'm a small company, but I deal with a lot of large companies.
Hmm.
And the credit worthiness I have when I come to someone like you is oftentimes based on my relationship with those other ones. And if I can
Yeah.
show you a blockchain smart contract, it gives you more credibility to look at me. That's
Absolutely.
kind of the way I look at it. So
Yes.
what are your thoughts on it?
You know, Chris, I've talked about, personally about, blockchain. It's kind of a hobby for me. I did a course at MIT on it and was blown away at, I thought I knew it until I went and did that course. And there's so many applications. Like you said,
And
people,
actually an online course, Scott, that you
it was
did
in
was a
person, but I chose to take it online because I have a business to run. But yes,
sure.
the other students, half the students went there to Massachusetts and did the actual course. I did it online just because I have a business and family.
Hmm.
But the younger folks definitely took, they
Yeah.
wanted to go to Massachusetts and go to MIT and see the school and meet the instructors. Um, but it really was, it was a blockchain applied business economics type course. And learning about how the blockchain does things and can fit into business, especially in the DeFi, they call it the DEFI world. I think is the future of finance.
DeFi, if I remember correctly, is
Decentralized
some
finance.
decentralized finance.
Mhm.
Exactly. And and correct me if I'm wrong. I'm sorry to interrupt you.
It's
Please
our-
continue in a
yeah,
second. But the decentralized finance, for those that are thinking about this and think blockchain is something that's not going to touch their reality, centralized finance is around the banking systems that are in existence today,
yeah,
fiat currency, all that kind of stuff. Decentralized finance, completely different, means it's a collective agreement on what value goes to what item or
yeah,
contract or whatever
yeah.
we're talking about. Correct?
Yep. Whatever
Yeah.
you assign that contract to stand for. whether it's goods, service, what have you. You can do a smart contract for whatever you're wanting to do, whatever your business application is. And I do believe that that is the wave of the future. You know, people hear blockchain and they think of Bitcoin. Bitcoin is not the blockchain. Now, blockchain is what powers the digital currencies. Bitcoin, Ethereum. Ethereum technically is what most of the smart contracts are being written off of right now, which is a digital currency, Ethereum. So you have ERC20 contracts that are generally the smart contracts you and I are talking about right now. And those will play, you might not even know it's involved, but there are so many financial instruments right now coming to light that are going to be soon implemented into our finance businesses. It's being done right now. And
so when you think about that though, and maybe I'm off base on this, but when I think about these new advances in technology, I always think about how, and this has always happened throughout history, you've got to, and I love the term supply chain because it fits so well with an end-to-end process in all these links in between, right? And what we're talking about here is how you focus on those links and you get the ends closer to each other by using technologies, efficiencies that allow these things to happen. And when you go to DeFi, whatever you want to call that type of technology, you're creating an efficiency for understanding contracts and moving money around and getting lending. Because for today's conversation, I got a feeling you and I could probably go off on some serious tangents with this stuff.
yeah.
But for today's conversation, as far as getting cash flow right with companies of different sizes, the effect of this kind of stuff to me means there's going to be new or better run financial instruments available for entrepreneurs.
Absolutely. I believe so. I mean, I think it's going to open up a lot of doors, especially with transparency. It'll give more trust for the lenders and more comfort for the borrower.
Right. Yeah, absolutely. I think and that's really the number one thing that I think that we want to get from today.
Yeah.
And I think that maybe the future of lending is changing. You know, you're my understanding of your business model, and maybe it's changed over time. Maybe you can define a little bit more in terms of Westmark and what you do is, but there's both direct financing and kind of brokered or indirect financing that you can accommodate for people.
Yeah.
But where do you see both your own company morphing, not specific to blockchain or anything, but where do you see the industries heading in terms of getting financing? Is it going to a more immediate, quick turnaround micro lens, or is it? I kind of view it as diverging. It's either going for that long-term, substantial dollar with huge assets behind it, or it's going to these quick moves, these quick, smaller moves. But I don't. What do you think?
I think with technology being what it is and evolving as fast as it is going, I think it will make things quicker, at least on the private end. When it comes to government type loans, SBA, stuff like that, there might be some speed in terms of appraisal services, environmental services. Environmentals have gone, if you get an environmental study report, if you're doing a commercial loan on a building, that has gotten a lot better with technology. Phase ones, phase twos get done a lot quicker, and they are a little bit cheaper. So that started to speed some things up when those things took a month. Now they take days. Appraisals now are done a lot electronically. They're able to get a lot of the data electronically. That's moving faster. But I think with private financing, I think it's going to get more micro, smaller, faster. With the government, you have so many different government loans. With commercial real estate, you've got your agriculture side. Those will still you've got your government bureaucracy, which is not going to change a whole lot. On your institutional side of financing, of course, that stays fairly big. You got your life companies, your big banks. Big banks too are going to keep on eating up, and this is really what kind of bothers me is the big banks gobbling up all the small regional and local banks, taking our main street, our neighborhood banking system, which has been notoriously the backbone of the economy, of a local economy. It's being overtaken by these big national banks, Bank of America, Chase, them all, Wells Fargo. And I'm not saying
Right.
anything bad about them. I'm just saying that for us small businesses, it used to be that handshake. And
Hmm.
that's what's changed a lot, is taking the small regional bank or the local bank on your corner that you go play golf with, that you might go play golf with the vice president or the president, and can make that handshake deal. The reason that's not happening is acquisitions. The large banks are acquiring those smaller banks and taking competition away. And all those big banks have the same guidelines throughout the nation. They don't care, they just want to see that there's a population the size of, over 150,000, 200,000
There's
people.
a narrower lane that they're
It is.
giving people to fit into, and the
Absolutely.
flexibility goes away. But at the same time, that kind of opens the door to what you were talking about before. With new technologies comes
Mm-hmm.
new, people are always looking for new ways to both uh, lend and get loans, right? So the
Mm-hmm.
people that are looking to lend are going to figure out ways with these new technologies to
Yeah.
become miniature banks, if you will,
Yeah.
in their own aspect.
Yeah.
And that's exciting to me.
It is. It is. And you'd mentioned before on some of these micro loans. Well, right now in some of the smart contract space, they are doing this. So basically, there's a loan request that goes out on smart chains, or
Hmm.
very very smart contracts go out. People will invest in those contracts on a micro level, and it's basically funding, group funding, crowdfunding.
Right.
It's
Right.
very, that is moving into the commercial market right now as well.
Yeah,
So
and those things have to be, is you can see that coming, like this group of micro lenders that are
mhm,
occurring in different places, especially in other parts of the world,
yeah,
not as much here.
absolutely,
But the question becomes, how do you corral that, right? And
yeah,
how do you focus that in on, the business elements that need to be
mhm.
supported? But I think it's coming,
Oh, it is.
and I think people in companies like yours that are focusing their attention on this stuff are going to be the ones that are ahead of the game. Now, I think the institutional lending also, I think one of the things that people always have to be reminded of, especially small entrepreneurs, is because there's a very large focus on minority owned and
Mhm.
diversity and things like that
Yeah,
within businesses. And the lenders want to see that as part of your portfolio.
yeah,
They, whether we want to talk about it or not, there is a tick mark in
mhm,
your column to get a loan if you are female owned or minority owned, et cetera, et cetera.
yeah,
And um, we could have a debate on rights and wrongs and all that kind of stuff. That's an aside. The fact is as a business owner, you should pay attention to those things because it can give you an advantage to move your business forward or to keep
yeah.
your cash flow going to the way
Mhm.
you need to do so.
Yeah, and that pertains mainly to government type loans and bigger banks that have more government regulation. Us private lenders, we don't have government regulation because we raise money privately, or we take out bank lines of credit ourselves, personally guarantee those loans that go out. So we don't have check marks on MWOBs, or minority women owned businesses, as they say. Or we don't care what color you are. We don't care if you're male or female. But
Hmm.
generally, the larger institutions and federally regulated institutions do have to follow somewhat of those
Sure,
guidelines.
sure.
Um,
What kind of the last thing I was thinking about, and because we're trying to keep most of these podcasts in kind of a shorter form,
yeah.
even though you've really piqued my interest with a lot of these items, the kind of the last topic I wanted to just see if you could, briefly touch on is the idea of and when I say private lending, I mean, locally sourced, yourself, your relatives, those kind of things, or OPM, right? Other people's
Yeah.
money, right?
Mhm.
And that old concept. and how business owners kind of should view that from your point of view. I know what I think, but what do you think about that? The self-funded or similar self-funded versus going out there and getting other people's dollars involved?
Well, I mean, I have a mixed view on that. I mean, I do. Mark Cuban, is someone we all know, Shark Tank guy. He is a big proponent of, hey, go out, scrap for it, save, borrow from friends and family if you have to. You don't need banks, is what he says. And I agree. I mean, it's been done that way if you have those resources, if you have friends and family, or you just, I mean, it's hard to go door to door and knock on people's
Right.
doors, so to speak, and try to raise money if you don't. There's people out there that just have no friends and family to borrow from. I am that way. I didn't have that when we were coming out. Now, our home healthcare business, we were able to do that. We did pull some friends and family member money, but it was very, very small. Most of it was my wife's and my money. We
Right.
took out from 401ks and all that. Sometimes you have to get creative and do those 401k loans to yourself. And I'm a believer in that, especially when you're first starting out. I mean, try with all your might, because if you go and do an SBA loan right off the bat, it handcuffs you in multiple ways. You aren't able to get factoring. You aren't able to do a lot of the other ABL type financing because the SBA completely wraps your loan up into a UCC1 where you're only able to get a merchant cash advance if you need a loan, and that's not a good position to be in. However, if you bootstrap and get your business up, borrowing from 401k, scrapping your savings money, and friends and family, stuff like that, try to get that money from them. Try to do it without an SBA. Try to do it if you can. So when it comes time to borrow money and you're 2 to 3 years old, you've kept your books right, you've got a good bookkeeper, a decent CPA, and a great tax advisor. When it comes to time to getting a loan from a bank, you can go walk in the door and get a regular conventional loan, no sweat, and do what you need to do with a reasonable interest rate, and really go and get a nice ABL line of credit that you aren't having to personally guarantee, and have your business fund the whole thing. And that's where it really would like to be. Of course, it doesn't always work out that way, but ideally, that's really.
Well, it's interesting, Scott, because I think, I mean, the way I'm, digesting what you say is at the front end of what you're trying to do as an entrepreneur, a business owner, moving your career along, all that kind of stuff. You need to dedicate your own resources to it to get it that momentum.
Absolutely.
So that when you need it to either, get a large client on board that you don't have the cash flow for, or get a bunch of assets that you couldn't afford through friends and family, et cetera. You've already taken that risk, you've developed to it to a certain point, and now you're ready to do something without having to cut corners. And I think, it always comes down to balance, doesn't it?
Yes,
It always comes down to figuring out a balance and focusing in on the important things.
Yeah.
And if there's any message that I'd like everybody to take away from this today, is that you got to keep your eye on the ball. And in this case, the ball is your cash flow.
Cash flow.
Is your finance. Exactly.
It is. It's the life of a business.
Well, Scott, I can't tell you how much I appreciate you coming on board with us today. I do have to ask you one question before we leave you for the day, though.
Yes,
What
sir.
in the world is that behind you?
That is a bank vault. That is a bank vault from the 1930s. This building had a bank in it. It was called the Ridgely Bank Building, and the bank tenant moved out years ago. And I'm friends with the tenant manager here, and he told me this would be the best office for me when I was looking for a new office, and he put me in the vault. And so it's a good conversation piece when we have people in the office.
Well, and that's perfect. If you wanna hire a guy to watch your finances properly for you and get you a loan, get a guy with a bank vault in the back. I'm not even gonna ask what's behind that bank vault because I don't want to know. I don't want anybody else to. But you know what, Scott? Thanks again so very, very much for coming on board. And I believe if I can get you again in a few months or something, I got a feeling we could take just one of the many subjects we talked about and dive into it. It would be, number one, a lot of fun, but very informative. Because you going through the MIT thing and having the background you do, it's fantastic.
I
But again,
appreciate
everyone,
it.
Scott Walton.
Thank you,
Appreciate it.
Chris. Appreciate you.
All
Take
right.
care.
Take care. Yeah, I just wanted to thank Scott one more time. A resounding thank you for coming on board and sharing with us some of his expertise today. It's real important subject and one that we're going to delve into in the future much more. I am sure of that, 100% sure of that. As always, though, go to our YouTube channel, JOZ Bytes, JOZ Bytes, and see our latest out there, whether it's an interview like this, communication like this, or whether it's just one of my mini bites, if you will, talking about a particular subject, hopefully related to what you're interested in, because that's the whole goal, to continue to find content that you're interested in and bring transportation logistics supply chain more into the mainstream, more into the common understanding of people out there today in the importance in which it plays in the roles in our lives. Go to, as always, www.ilevellogistics.com, ilevellogistics.com, and see us there. Take a look at our videos. Go to our podcasts on Apple Podcasts, Spotify, any other podcast platform that you want. We are probably on it. Give us a 5-star review. Ask for more content, comment, join, subscribe, all that sort of thing. Be part of the growing community. Thank you very much, and we'll see you next time on JOZ Bytes.